So, what a week it has been in the market. Who would have thought we would have had a 4 standard deviation move in the market? One of the craziest weeks since 1974 in the Dow. The Dow actually snapped its biggest losing streak since then of 13 consecutive days. Oh boy. And pretty much December has just been a rough month for the bulls. It's been profitable for the bears, especially with the latest move Jerome Powell triggered as we were heading into quad witching, which again, $6.5 trillion expiring, worthless on that day. So the market definitely got its premium not paid out, and market makers were more than happy. But the question is, where are we going from here? Where is the market going to be going? And that true answer is very difficult this week, considering the range of the week is absolutely massive. Let's just take a look at this weekly candle, guys. Like, this thing encompassed almost 6-7 weeks of previous trading in one single candle. So we're going to be talking about exactly what levels we need to look at, we're going to be deviating a little bit from the standard way of looking at stuff on the S&P. But yeah, this was one of those crazy weeks in the S&P. We did close below the 50-day moving average for 3 consecutive days, so that is concerning right here. And where we could be going from here, especially after the news catalyst. And again, let's just quickly jump over to the news for the following week, right? We're going to get into news in just a second of what happened. But Monday, we got consumer confidence. Tuesday is an early day with new homes. Wednesday, markets closed. Thursday, there's nothing much besides jobless claims. And then Friday, there's not much either. So the market's going to be pretty much left to its own devices. And the question is Santa Claus going to come this week? Is Santa Claus going to rally the bulls into buying up the market, especially as we are basically heading to the end of the year? And again, remember, the grading for hedge funds is the end of the year, so we're going to be looking at their portfolios, what they made, what they didn't make, and especially with the market basically being beat down, they may want to push this thing up just so they get their Christmas bonuses. Remember, everything has to have an incentive, and if they're out of the market, I don't suspect that we're going to get much of a market rally. The NASDAQ actually did a little bit fair to bet better than the S&P, not below the 50-day moving average, and almost made it to a failed weekly breakdown. So that was pretty amazing. We had a failed weekly breakout and a failed weekly breakdown, possibly in the NASDAQ, that didn't come to fruition within almost $1, right? Failing to hold that level. However, they did push pretty far into it. So the bulls aren't completely dead. And we can look at some bigger names like Nvidia, right? Coming back to life a little bit after forming a bottom here, getting above that 9-day moving average, seeing how things are scoring up in the markets. I did like that VIX came crashing back down below the 20 level on Friday. That gave me more confidence that this is the spike on VIX, added some more premium to the portfolio, and thus I'm going to basically sit out on the holidays and sit on my hands, not doing much. And if you guys didn't know, Rumble actually did something amazing in after hours. They got a huge investment and they're trading up to $11. Insane. $7 to $11, 30% move, $3 move. Absolutely insane. So we're going to be talking about this probably during the week and seeing how this all plays out. This definitely could ignite a little short squeeze in Rumble. Just a little side note for all those that follow us on Rumble. Thank you all so much for that. But let's dive into the news that happened this week, right? So let's just go through what was going on this week. Obviously, we had PC come in better than expected. We were streaming that live when it came out, and I basically said that could initiate a short squeeze. We got a little bit of short squeeze, but with quad witching, we did see some of those market makers push the market back down where they wanted to close. So we have to see, really, Monday is going to be the test how everything plays out, because that's when the free market really returns. Quad witching days, there's always manipulation by market makers, so they wanted to close at a certain level, and you're not going to basically change that. So, but it was pretty confident that we had a nice bullish push. That was really nice. That means a lot of people were loading up short, and they may have got stomped out. Speaking of getting stomped out, if we look at the shorts, they actually took profits from 38 to 39, still net short, so there still is a little bit of squeeze left in the market. However, they may have gotten some reprieve at this point. S&P and the NASDAQ positions increased by about 1K, so still holding that bullish sentiment in the NASDAQ. We haven't seen that actually go negative yet, so I don't suspect a massive move to the downside. I expect more upside potential, and we'll get into the levels in exactly just a moment of what that looks like, what we have to look for on the S&P. Again, Powell was right. GDP coming in at 3.1 versus 3 previously versus 2.8 expected. So how he said that everyone's predicted this thing to go down and it hasn't gone down. Case in point, I probably think he knew the number before he made that comment, knowing what the number was, so he wouldn't look like a dum-dum. But then again, we have to keep an eye on that as well. We had the FOMC projection, right? That was the reason that we had the Wednesday sell-off, the massive 4% day. And the other thing is the Russell did catch a bid, right? So the Russell catching a bid was pretty promising after it had its massive landslide. But it is still in this no man's land. It still needs to get back above that 50-day moving average. And we could see that going into the beginning of the year as we head into the holiday season. So again, we are in this fearful territory right now where we could see a massive market push. Remember, when this needle was in fear and cranked all the way back to greed, we saw a massive 6-7% squeeze on the market. So are we in store for that, or are we going to stay in fear for a little bit? Let's dive into the weekend levels to know exactly where we need to be going. And it's going to be a little different this time because the range is pretty massive. But let's jump into that real quick. So we got a little bit of complexity this week with the S&P. As we can see that we closed below the 50-day moving average and there was a consolidatory period around that 591 number. We definitely want to hold above that number because it is the rotationary point that we want to get back above. If we get back above 591.15, and really the 50-day moving average is going to be our moving target with that. I'm expecting that to be about 591.50 on open on Monday. That's where we really want to see the Monday close. Then it's basically how much gain can we regain from the all-time highs, right? A 602 really is that bullish initiation where we get back above this level. This is considered then filling the dip, as I would call it, where we get back above this level, form that trough, and then we can push higher. 609 obviously is a blue sky breakout, and subsequently we run that sucker up even more as we squeeze higher. Now the question is going to be, do we come back below 591.15 on open? Do we get a gap and go open on Monday? That is all to be seen, and I can't really tell you which way it's going to go because right now we're at this crucial pivot point. I would definitely keep an eye on the Russell, and we'll give you guys the Russell levels as well because that's going to be the leader. As we saw on Friday, it was leading, kind of gaining some of that momentum back. That drove the rest of the market up. Subsequently, if we're below any day 591.15, I'd definitely be looking to see if 508.91 gets threatened again. If it does, we can get an early warning sign from this previous gap fill point of 583.86. And if we're starting to come back down through here, it's really the question of, are you going to get another corrective phase? And the target really at that point is 551. And we got to start talking about some bearish positions. I'll keep you guys updated if that occurs. I would say attribution, looking at how fearful we are in extreme fear and how we basically bounced back, I would say there's maybe a 90% chance upside, 10% chance downside. But as we get closer to that 583 number, it is increasing steadily because that means, hey, why aren't the bulls buying this up? Why aren't we pushing higher? Why aren't we defending these lows? And then subsequently, they'd be lower lows and lower highs. So right now, you have a lower low, right? You have a lower low right here, but you don't have necessarily a lower high, right? So higher high, higher high. We have to see how this plays out. Are we going to make that higher high now? Are we going to keep pushing up in the market? And if we do, great. If we don't, how are we going to play it? So that's what we're going to be staying tuned to find out. I definitely be looking at bullish positions above 591.50, close above the 50-day moving average. That'll be a strong sentiment for the markets. And we'll also get into some of the mega cap stocks to look at what are some buying opportunities out there. So let's jump over to the NASDAQ, right? We can clearly see that the NASDAQ did hold the 50. So this is the important part. The NASDAQ really don't want to see anything below 509.29. If you do, that's 50-day threatening. S&P is breaking down. There's a lot of bad things. We really want to see that 526.50 get broken. Again, the 9-day moving average kind of just curling right here to the upside, wanting to go back up to that 540 roughly number to new all-time highs. And the NASDAQ's going to be our temperature gauge, really, along with the Russell. If we're above 529.48, then we're just going balls to the walls, bullish approach as we previously were having. The NASDAQ, on contrary, did actually make a higher low and a higher high. So we're in this phase, again, of sitting and waiting to see what's going to be going on. If we break above 526.48, then we initiate bullish positions. If we break down below 509.29, we see if the 50-day moving average is going to hold. If it does hold, great, then that's a really good dip buying opportunity. But I wouldn't be betting it considering the momentum was so sharp to the downside. Any further downside would basically capitulate everyone out. Now, speaking of volume, right, we're kind of seeing this price and volume coinciding, forming a capitulation style bottom where everyone was just fear selling. So again, it leads to the credence of like a 75-80% chance of more upside from here, but we still have to be cautious about that downside. Simply, we can look at the Russell to know which way that's going to go, right? The Russell just got hammered and really didn't get a true bounce. So if the Russell gaps and goes like it historically has done multiple times over, it has a lot of ground to make up, right? We're looking at approximately 8%. So you could, if you missed out on a massive rally, the Russell is probably one of the best buying opportunities right now because small caps absolutely got slaughtered. And considering that the sentiment is so bad for small caps, it definitely is in the cards. Mid cap, small caps, the Russell. I truly believe the Russell is still the best game in town for greatest percentage improvement next year. And as Tommy said, he expects a 40% rally in the Russell. I could see that if that momentum picks up for those small caps. So that's why I'm going to be definitely betting on the Russell and holding that position for quite some time. So looking at this, right, it's pretty simple math. 218 gets broken, everything's bad, right? Really want to see what Russell does, filling this area right here, which is up to a 230, which is the 50-day moving average. If we get above the 50-day moving average, and really 231 is the rotationary point there. So again, those may coincide. Next up, 235.64, previous resistance point that we failed to break above when we were having that short bounce or dead cat bounce in that case, and then subsequently for a 240 going to the upside, trying to push to those new all-time highs. So with the Russell, we really want to see, hey, is there any downside potential, because there's little to no room for margin. So make sure you guys are paying attention to the Russell. Now let's jump over to the mega caps, right? So looking at, let's say, Amazon. Okay, pull down, could be an A to B pattern on the way up, right? Simply looking at this A to B pattern, Amazon basically 256, A to B playing out. That definitely could be a nice momentum play. We really want to get above that 227 number. Next, Nvidia, like I mentioned previously, looking like it wants to find a bottom around here. Nice increase in volume as price is going up. So it could be forming this nice bottom here. Also could be a bigger cup and handle kind of forming right here. A little more jagged, right? Cup, handle, you know how that plays to the upside. So again, definitely looking at that, and we can see like sympathy plays from AVGO that we're having that big massive move, right? Massive bull flag here, retracing similar to how Nvidia did. Let me just show you the 4 hour. Nvidia actually came back the same way when it did its massive gap to the gap fill, which is the yellow line at 213.90, and then rotated above that. We don't necessarily have this on the day trading, we have it on the intraday. So again, keeping an eye on AVGO. It is an interesting spot right now. If you missed out on the rally to maybe catch it like in another Nvidia play, I'd definitely be looking at buying some myself. AMD just getting absolutely slaughtered. Trying maybe to come down to that 112 number. Let's see if this bleeding will finally stop. I'll keep you guys updated on that AMD play that I'm currently in that is beating me like no tomorrow. Meta closing about a couple cents below the 50-day moving average, where this is concerning, but it could be an interesting buying opportunity because the market looks like it wants to bounce. So if Meta catches a bounce right here, is support going to be support? Are we going to break down? Are we heading lower? That's the natural question. Microsoft breaking down below that 440 number, trying to regain it on Friday. A lot of stocks with a lot of volatility. Massive buying on Microsoft going into Fridays. So looks like a bounce. That's what I'm going to say. I think this is a bounce because of that. Netflix holding that steady 900 number and looking to push higher again as it's going. Apple, massive day. This is why I'm saying I don't believe necessarily this to be a bear move. I believe this to be a buying opportunity, because if you're just buying the biggest cap stock in the market, why aren't you going to not buy the rest, right? Even Tesla, even stinky Tesla coming down, not really retracing much. Yes, you retraced approximately, I want to say 10%. Yeah, 14% from the highs you made, but you just ran up like an insane amount of 70%. So 70, 14, that seems like a good ratio. Pullback, maybe a buying opportunity as Tesla sold off on recall for tire sensors. Out of all the recalls I thought Tesla would have, that's not the one I thought that would bring the stock down. We can look at Google as well. Nice power move above here. So everything's just going in the right direction. Intel, I know I was talking about Intel previously. I'm still thinking around that $18. It still has more room to come down. Really hasn't shown me much price movement to the upside. However, I know all of you that love Intel, I don't understand. But then again, that's just my opinion on that. Now, Fatal's going to give you guys the biggest winners and losers, and then we'll be back for the debate section of the video.
So the Fed was not kind at all to the markets, even though they gave them exactly what they wanted. A cut, one last cut for the year. And you guys can see on the 5-day, this thing is down 2.23% on the S&P 500. And the 1-day as of Friday did gain around 1.09%. Looking now at these past dividend hikes, we got Waste Management hike dividends by 10% on December 16th. Then we got the dividend aristocrat Pentair hikes dividend by 8.7%. And the last one, it is Lamb Weston Holdings hikes dividend by 2.8%, but the stock crashes 22%. Now, seeing that we are at the end of the year, we have no earnings for this upcoming week. Now, we do have earnings, yes, but it's two companies on Monday, and that's really it. No one's having earnings for the next basically 2 weeks. And just as we saw with the 5-day, we can see that on the week performance, this is just a ruby, which I actually really do enjoy. We can see, guys, that in the technology sector, the worst performer, it is the company SMCI losing 13.33%. But also, we got companies like Micron losing 12.08%. And the best performer in the whole entire sector would be none other than the company JBL, gaining 7.33%, but also Palantir at 5.89%. Guys, there was literally like no massive green at all this week when it came to the tech sector. Looking now into the consumer cyclicals, this completely got eradicated as well. Worst performer, here it is none other than the company, who is actually going to be a little bit difficult to find, but by the looks of it, guys, it does seem to be none other than this one right over here. Caesars Entertainment losing 11.32%, and the best performer is actually Darden Restaurant, I was going to say DR Horton. Darden Restaurants gaining 12.54%, but companies like Home Depot falling 5.85%, Lowe's falling 5.59%, and a bunch of other ones falling a lot as well. Looking now into the consumer defensives, wow, there's two green ones here in the whole entire sector. Absolutely crazy. We got the worst performer being none other than the company. Once again, it's really difficult to find. Okay, I found it. Lamb Weston Holdings, which is the one we covered with the dividends, losing 21.67% on the week. Wow. Maybe this is one that we take a look at, guys. I'm dead serious about it because that kind of drop is something that you have to take a look at. And the best performer, it is Dollar Tree, gaining 4.07%. Looking now into the financials, we can see that there is a whole lot of red here as well. The worst performer seems to be none other than the company. Just doing a skim through over here, we got the company Blackstone losing 9.33%. And the best performer, it is the company Globe Life, getting 3.77%. Looking now into the communications sector, this is also very much deep in the red. Wow, so much red. Gotta say, so much red, so little time. We got the worst performer being the company Warner Bros. Discovery, losing 11.43%, and the best performer, Fox Corporation, gaining 5.2%. Guys, Meta falling 5.66%, T-Mobile losing 5.0%. We got Verizon 5.56, bloodbath, absolute bloodbath. Then we got the healthcare sector, another sector that completely got nuked from orbit. The worst performer is the company Vertex Pharmaceuticals, losing 14.33%, and the best performer in the whole entire sector seems to be the company Dexcom, gaining 3.69% on the week. Then we got the real estate. All of these are in the red. All of these are massively in the red. So the worst performer here would be none other than the company. Oh, wow. It does seem to be, I thought it was going to be American Tower, but no. Oh man, it's actually really difficult to find here. Yeah, we got the company Vici losing 7.5%. Wow. But you got companies like Prologis 7.03, EXR 7.08. You got American Tower losing 6.81, CCI 6.64. So yeah, this was a very, very bad sector to be in this past week. And the best, or at least the one that lost the least, would be none other than the company. Let me just see if I can find it. Seems to be, guys, this company over here, Avalon Bay Communities, only losing 1.88%. Now, the energy sector also took a massive, massive crash. We got over here all of them losing. Wow. Worst performer, it is none other than the company. Once again, it's going to be a little bit difficult to find, so just bear with me. That's 945. Ooh, I think it's 100%. That one, yep. Seems to be the company Phillips 66 losing 10.06%. And the best performer, or at least the one that lost the least, was the company Kinder Morgan, only losing 0.11%. Companies like Chevron is down 7.16% to $142.85 on the week. You got Occidental, which Warren Buffett just increased its stake on that one. Really, really interesting. ExxonMobil also falling off a cliff. So it's looking like a good time to buy into the energy sector again, guys. Not going to lie. Now, looking into the utilities. You know, somewhat similar to energy, but definitely not to the same extent. This is by far the greenest sector that we have seen so far. Worst performer here, it is none other than the company Constellation Energy Corporation, losing 5.04%. And the best performer, it is the company GE Vernova, gaining 3.21%. And looking now at the basic materials, once again, this is just red all around. There's not a single green one. The worst performer, it is none other than the company. Let me see if I can find it. Let me see if I found it. It is the Mosaic Company, losing 10.15%. And the best performer seems to be this one, guys, which is, it wasn't the green, but it was barely in the red by about 0.5%. Celanese losing 0.48%. All in all, massive, massive red week. We'll see what happens. Again, this was due to the fact that the Fed, when they came out with their newest SEP, Summary of Economic Projections, they basically just nuked all expectations as per it was back in September. They were expecting inflation to be a certain way in September, and now they actually increased it, which is causing a lot of panic. So that pretty much does it for this section. With that said, take it away, Mike.
So who thought we would be here today with the fear and greed index broken the proper way?
Well, I'm actually not that surprised. I mean, we did have I'm going to say massive rally. We're still down overall on the month, if I'm not mistaken, by around 2% or so. That's not really surprising to see that we are at basically, between the extreme fear and fear.
Yeah.
I mean, we did have a nice pullback, but we've been here before, right? We've been here before. It's the beginning of it's the end of the year, beginning of the new year. Usually what happens, and we've talked about this on the stream, what happens is the second that 2024 turns into a 2025, it's as if 2024 never happened and everything just keeps going up. We experienced this 2 other times before, 2022 into 2023, and then 2023 into 2024. So
I love how it was like, oh, we're just gonna forget about this, and it's like going back to what it was historically, right? It's like when we were here before, right? 2020. Sorry, it was here, right? December, Santa Claus rally, pushing right to all-time high peak, and then it's like 2024 to the moon.
Right. So I look at this and I'm just like, yeah, could we have a down day? Could we end the year in the red? Like, could the last day be in the red? Sure. But I just don't foresee this thing going lower. I just don't. I
think we're going to end the year at all-time highs. That's just my personal opinion, because
really?
the bears blew their load. Look, massive push, massive volume. So you have to get the continuation in order to keep pushing down lower. And they failed to do that, right? The best they could do was defend, and this was also on quad witching, right? So the market really wanted to close at this level. This is where market makers were like, no, we want it here. We want it here, because we're sick and tired of paying out all these calls. and they
Right.
they let it expire, right? You know, they let it push down. People loaded some puts here, people loaded calls here, and they were like, okay, let's just enter right here, right, smack in the middle of everything. So they got the most amount of money because again, they got to make their money too.
That's
But if
fair.
you look at
Yep.
the number one cap stock, Apple, it just freaking like explain to me where PAL happened, right? It's like, oh, that, right?
I guess, but even that isn't necessarily like honestly, like if you showed somebody that graph, right? That
Yeah.
that Apple graph, gave them no other context, didn't know that the FOMC was this past week or anything like that, I'd just be like, yeah, it was a down day.
Yeah, and
That's
then
it.
and then you
It was
show
just, it was just a red day.
and then you show them this, and it's like, what the? It's like, what on earth? What on earth happened, right? Like you show them
Right.
this, and then you show them Apple. It's like, eh.
Yeah.
It's like even
Right.
Tesla, right? Even Tesla, right? Like you're up 72%, and then you push back down 14%. It's like
Yeah.
it's like pull
It's,
back.
do you know what that's called? You know, it's called a pullback, right? It's a pullback.
Yeah.
That's all that is.
And then you
But-
got like, you know, the
on.
cult following ones like Netflix also. Mm-hmm. It's like PAL and then nothing, right? Like all these companies, all these like mega caps, they're like, meh. Like your baby, for example, AVGO, right? Like
right.
pushes to all-time highs. Like PAL happens, yeah, PAL happens, but then it rotates right around gap fill, right? It comes down right to the gap fill, rotates right off of it. I'm like, oh, this is a NVIDIA 2.0. This is following the
Probably.
NVIDIA recipe book to the letter.
Probably. It will probably continue to go up. But, I mean, the way that I see it is that, well, a lot of people may be like, oh, no, everything's crashing at 3% and all that stuff. Guys, great buying opportunity.
Yeah.
If I do say so myself, right? If I do say so myself, this is a great buying opportunity in general. And not just for tech. You have other companies, for example, HD. That one has fallen to 5%. And I know this because I just
Home
did
builders got slaughtered recently.
Yeah,
Like,
yeah.
if you
I
pull
know
up-
because I just covered this on the
Yeah.
heat map. Lowe's as well. It's not just right. The energy sector completely got decimated this past week.
Energy
It was
or
insane.
utilities?
No, energy. No, actually, utilities was fairly in the green, but energy got decimated, completely decimated this week. Yep.
And
Yep.
here's the thing about energy, right? This is the safe sector. If everything's crashing, this should be doing the
Ah.
opposite thing. It's the
No.
sector everyone runs to.
No, it's not. It's the utility sector, which
Okay, let's take a look
explains it as it's the utility sector, which explains it because it actually wasn't as badly negative
Okay.
as the energy
This
sector.
is not market crash territory. This is just we sell because we want to sell to get it lower. This is, in my opinion, looking at this, right? Okay, XLE gets slaughtered, XLU gets slaughtered, XLB gets slaughtered. If you look at chips like chip, if you show me chips, it's like, eh. It wasn't bad for chips, right? Tech got a decent beating, but it came right back. But like if you look at like these like XLF, right, financials,
Right.
they got beat down. It's like everything got beat down. I'm just sitting here. I'm like, hedge funds got grading in 2 weeks.
Yeah. Yeah.
Do you not think these guys are going to be like, oh, we let's see, how much down are we? Oh, we can make
Not-
7%. Let's go.
Not to mention that we are going into now a low volume week because there's 1.5 days, if I'm not mistaken. Actually, I would say low volume for the next 2 weeks because really
the next
New Year's
week after
Eve.
that is like all the big
Also-
hedge fund players are like they're gone, right?
Right.
They're gonna Monday. What they'll probably do is load the boat Monday, and then they're gonna basically let me transfer that. They're basically going to load the boat Monday and then forget about it. They're going on holiday,
Yeah.
right? Monday's the last working day for these people. And really, like you said, we're having an early close on Tuesday. Wednesday, we're closed for Christmas. And then we get to rinse and repeat it all next week.
Right. Literally like the exact same days, Tuesdays and Wednesdays. But also something here to remember too, my good man. On Friday, the 2nd, the market is technically open. So we are going to have, which is usually doesn't happen. I believe we usually come back either the following week after, like usually New Year's doesn't land on a Wednesday. Usually it lands, on like a
Monday
ladder.
or a Friday, right? It doesn't.
Right, a Monday or a Friday, where in this case, it's like, boom, right after New Year's, the market's going to be open again. So
Yeah.
that's going to be
So
interesting in and of itself. And let's see if my prediction actually does come true, which I think it will actually come true in the sense that we're going to see a massive pump on the second.
So you think because you come back from the holidays and then you're heading into job number week afterwards, you think that it's like going to be light switch moment of everything's going to forget about the Fed because the Fed doesn't matter in January, right? Because the CME
Right.
expectations 8 versus 9.1, which is coincidentally going up slowly. It's like slow boiling the frog of the rate cut in January. I'm like, I can't wait for this narrative to come back and be the standard as March was, right? Near before the PCE inflation, this thing was like 60-40. Now it's 48-48, right? Dead not even. And then also the one loner out here trying to say a 50 basis point rate cut.
That 4%.
That 4% is going to get a zero behind it very soon because you know how the market twists itself into a not trying to come up the reason why.
It's true. It's true. So I don't know. The way that I see it is that it's going to be a really low volume week, meaning that who's going to be the ones trading? You know,
Bulls.
mainly
It favors the
institutions.
bulls. Low volume favors.
It does favor the
bullish
bulls
because
it does favor
in
the
order
bulls, yes.
like short squeezes that are initiated, they run. Now that doesn't mean that you don't get a bomb week, right? It can bomb. It's just very unlikely, historically speaking. Looking at every single December that has happened for the past 2 decades, has been bullish. December Santa Claus rally.
Bomb usually means crashing, my guy.
Yes.
Just letting you know.
Yeah,
Just letting you know.
it's basically we can still bomb the week and basically be crappy. And if we just go over to like the S&P on the monthly chart, like you mentioned, we're down 2%. This is uncanny for December's. Because if we go back and look at the last December's, like look, the December of 2022, when the light switch occurred, when the official light switch occurred of 22, 23, we were red, and then subsequently we were like just go times. Our December of
2022, and by the way, N22 was the year that we had that correction on the NASDAQ up to like 20%.
Yeah, so it was a green month running into all-time highs, right? We don't have that right now. But if we go back to, let's see, December of 2020, right, green, we're looking at 2019, September was a down year, but that was during the Fed temper tantrum, right?
December, you mean?
Yeah. So if we look at usually the December timeframe, it is in a bullish phase, right? December is the Santa Claus rally month. So again, as we keep pushing on this crazy market, it's like, okay, where are we going to go? I personally think, again, we're going to go higher. And
especially let's add on to that as well, especially since what's happening in January, not the election, but something else regarding companies. No, regarding companies.
Oh, earnings season starts.
Right, and who are the first ones to give out earnings?
Banks.
The banks. So
they're going to paint a rosy picture, I think.
Right, and what are these earnings going to show us? What quarter?
3.
Q4.
Oh yeah.
4. It's Q4, right? Q4 happens in Q1, right? So we're gonna get a really great view. I mean, we're gonna get view as to how Q4 actually performed with the holidays.
Yeah.
It'll be interesting. It could be either a complete disaster, or it could be like a blow off top.
Yeah.
Which I personally foresee a blow off top. There's no reason to think as to why not.
And if you look up, like, for example, JP Morgan earnings, right now they're expecting, if I get this to zoom properly, 8-1, right? They're expecting 8-1 for earnings after JP Morgan was selling off, right? And that company, banks were selling off this last week. So if you guys want to scoop them up before earnings, make sure you take a look at maybe the expectations to know what you're playing into. And obviously not financial advice, but if you're looking to buy banks at a discount, selling 13 days in a row off is a pretty good discount if they're an appropriate point, right? So looking at that, right? Again, how are they going to play?
Make sure to catch the videos that I have also done in regards to the banks. If you just type the $sign with the ticker on the channel on the search bar, it should come up all the times I have done it.
I do love how they have 0 to 14 for Bank of America. That one I find funny. But let's see, Wells Fargo, let's take a look at the big three.
The big four.
Yeah, so Wells Fargo 12 to 3.
12-3. Wow.
So that's Wells Fargo.
And the last one?
Let's see Citi. What do you think it's going to be? Citi is always an interesting one. I think it's going to be
Citi is an interesting one.
I think
Citi is an interesting one.
I think it's going to be even. I think it's going to be dead even.
Even? Yeah. Citi is an interesting one because, bro, this price does not move. Like, if you scroll down to that chart, or go to summary. If you scroll down to the chart, If you go to the 5-year, yeah, look at that.
10 years.
That hasn't moved.
Lost
It
decade.
hasn't moved in 10 years.
Lost decade.
Pretty much. Like the peak prior to what we have now was what, 2019?
Yeah.
Before the pandemic?
80. It's hit 80 in 2018, 2020, 2021. Can it hit 80 again in 2025? Or is it going to break it?
But let's go to the earnings. Yeah, let's.
Yeah.
I mean, don't even remind me about that.
Yeah,
you
now-
showed me that, and I was just like,
Now, this is a caveat.
What happened?
Look at the volume. Look at the volume. City was pathetically small when it was back in this 456. So, having said that, context, right? You got to take it into context. The 10 years is a more appropriate context based on volume. But
Right, and
let's
that was
see.
mainly
I'm
because
going to
of the financial
say
crash.
dead even for the expectations. What are you saying?
yeah, I would say roughly the same. Maybe leaning more to the upside, but
Ooh.
yeah, dead even. Basically, dead even.
Yeah, it looked leaning to the downside, 5 to 8. So like if it was 6 or 7, it would probably. But this is always an interesting one. City always is a toss up. And case in point is chart. Literally up down up down up down up down. So it's like
It doesn't move.
let's see some other ones like Goldman Sachs real quick. Just going through like all the banks, right, just to kind of get a broader market sentiment.
I don't think
Dead
Goldman
even.
Sachs is a bank. Just FYI.
Yeah, they're investing bank.
Right.
Morgan Stanley.
Right. That's another one investing. Let's
13
see.
to 2.
13.
Okay, so
How about
this is
Charles
different.
Schwab? Look up SCHW.
SCHW. I always forget about Schwab.
Yeah. Yeah. Let's see.
Wow.
See. Wow. They have had a rough year too. This 2024 has been rough for them. If you look at that graph, it's been a
lost
roller
decade.
coaster.
It lost year. It didn't really do much. Right. It hasn't. It's like City 2022 to now. It's just been sideways.
It's been a roller coaster. Yeah. How about T Row? Can you look at T Row?
Sure.
TROW. Yep.
T Rowe Price.
This one has also
9
been
to 3.
9-3. Wow. Okay. Yeah. This one's also gone for a ride as well.
All the banks. I think.
Well, this isn't a bank. Yeah. This is what I'm talking about. This
Yeah.
is not a bank, but
So again,
yeah.
a consensus of price around 100, capability to run.
right.
It's like the Russell. I'm gonna beat this dead horse until I'm blue in the face. The Russell, is probably. Let me put up a weekly view. Like the Russell, if I showed you this and I showed you S&P and the NASDAQ, you wouldn't be able to, this doesn't look like it rallied, right? From the bottom of 24, right? Light switch moment, you're only up 36%, whereas the NASDAQ and S&P are up way more. But
Right.
this thing, if you just look at how it spent 2023 when the S&P and NASDAQ are both rallying significantly, this thing is up. And look at where its all-time high is. We made a new all-time high, but
Wow.
barely this last couple weeks. But we just barely got back to all-time highs, whereas S&P and NASDAQ have been making all-time highs for several months now. This
has.
thing,
Yep.
if you apply the same thing of the same move the S&P and NASDAQ have had, this thing is just lagging behind. Again, that 320 prediction from Tom Lee right up here is not absolutely insane considering how undervalued Russell is, because a lot of these small caps and mid caps have just been slaughtered.
They have. They
And
absolutely have.
how long can you keep the sentiment so low until eventually it's time to buy?
Yeah. Yeah. But it'll be an interesting week to say the least.
Yeah,
Right? It'll be
I
an
think
interesting
again
week to say
my
the least.
final argument of why it's going to be bullish, the VIX coming back down. That's my main thing. VIX slamming back down on Friday was pretty much a confidence move for me to say it's going to be a bullish week, especially with this peaked, cratered out, came back down. You didn't cross the 30 line, which is something breaking, right? 20 is panic. Below 20 is everything's coming back down. 30 you're starting to break something. 40 you've thoroughly broke something. And the Fed hasn't managed to break something yet. And everyone's I saw all these articles and I found them super amusing about reverse repo. That magically, everything's...
Under 100 billion?
But hold on. 100 billion while the Fed told you we're not going to pay you as much. Logic. People are taking their money out because they're not getting as much of a premium.
Yeah.
It's
that makes
everyone's
sense.
so we fall from literally, so we do this, right? We fall from trillions to billions. Nothing's wrong. We go from 100 and let's say, let me zoom into the latest, right? We go from 180 to sub 100. The whole world's falling off a cliff, right?
Right.
This move, we're falling off a cliff. This move, everything's hunky-dory. I'm just like, yeah, you people don't understand anything. And
then you also had like a bunch of other news that's upcoming this past week as well when it came to like stores closing down and stuff like that. So
yeah, and it's also like in the bond market, right? Like if we go back to the bond market real quick with the 10-year, yeah, you had a massive push on the bonds, but the question is now, is this going to hold up? Is this going to basically be a fake out, especially now that the debt ceiling is not an issue, the government's funded over this weekend, right? How's that all going to play into everything?
right, yeah, that's something that also got resolved as well. Again, it's gonna be a short week in general for the markets, but short 2 weeks actually. But I mean, we might be surprised. We may be surprised.
All right, so guys, thank you all so much for watching. Hope you guys had a wonderful rest of your weekend. Make sure you guys check over the video here where we went over the PC Live. So if you guys want more in-depth of what happened during PCE and the market push that subsequently occurred afterwards, check that one out. And we hope to see you guys in the next one. So thank you all so much for watching, and see you.